Becoming a millionaire has always been the American dream, and according to Kiplinger, only 10% of Americans have actually made that dream a reality. But I'm going to show you how you may just have more than you think. So if we haven't met, I'm Eric with Jazz Wealth, where we manage just over $500 million in assets and also the founders of the 2-bucket Powell method. And so going through this and kind of helping you to understand where we're at exactly, I want to talk through first, the 4% rule, because if you understand the 4% rule, that will help to set the tone for everything else we're going to talk through to make sure that you understand that you have more than you think. And with that 4% rule, oftentimes people talk about, let's just say you have $1 million, and if you have 4% withdrawal rates, that means you're going to withdraw $40,000 a year. Now, one difference with the 4% rule and how all this would work is you have to have $1 million to get the $40,000. Let's hope that you would then receive a 6 or 7% return. When doing that, then from there, what you're going to have is an increase each year so that you'll have an adjustment for inflation. So as your account grows, you still pull 4%, the account will continue to rise. So with that whole breakdown there and taking through that, the first thing that we really want to think through here is, what if you have a pension? Now, when I say what if, this is not going to be for everyone, but there's multiple others that I'm going to lead to here in just a minute. The first one being the pension. Only 20% of Americans have a pension, according to Kiplinger again. But with that pension, if you have a $40,000 pension, and especially if you have an inflation adjustment, or sometimes called a cost of living adjustment or a cost of living increase, if you have that, that's a lot like using the 4% rule, especially if you're getting $40,000. That's like having $1 million stowed away. I talked to someone just the other day and they said, well, I've got my pension and I get $40,000 there. It's like, well, you're kind of a millionaire if you look at it that way. Sure, you don't have the liquidity. You're not going to have that liquidity at the end of life, potentially something for a legacy. But when it comes to a fixed asset that you have there that's a guaranteed income coming in from that pension, it is a nice way of looking at things and being able to just have a sigh of relief to not worry about the market volatility and knowing that even though you may not have $1 million in the bank, technically, you got some money there. The second one is Social Security, and this is one that a lot of people don't really think about as much, and maybe some people even look at Social Security and they say, well, I paid my money into that and I want to make sure I get it and have their views there. With the Social Security specifically, though, what I want to break down is thinking through what this could look like. For you specifically, when it comes to the Social Security, the average Social Security at full retirement age is $2,071 or $24,852 annually. That's the breakdown that you're looking at. So let's go back again to this 4% rule. And if we talk through that, no, you don't have $1 million. Sorry on that one. but you would have $621,300. And again, Social Security has an inflation adjustment here, a cost of living increase. So this allows you to increase your dollars every single year. So if you had, let's say, $400,000, and then now we incorporate in the $621,300, if you're getting that average Social Security, that would be $1 million. So again, we're back to this $1 million in a different way of thinking. Now, the third one that we want to talk through here is one from Robert Kiyosaki. I don't know if you have ever read the book Rich Dad, Poor Dad. Robert Kiyosaki, a famous investor and author of that book, he talks about home equity. And he is an investor. He focuses a lot with real estate, and he talks about your primary residence really being a horrible investment because there's tons of money locked up there, but you can't access the equity unless you do a line of credit against the home or something there. And I'm not suggesting that be the case whatsoever. But what I do see with people that are going to retire is they have a home that is appreciated in value significantly through the years. And if that is your circumstance specifically, maybe you don't have a lot of liquidity. But if you were to sell your house and downsize, because at this point the kids are grown and they're out of the house, and you have the ability to now take some of the money off the table from the house that was locked up and now put it into an investment to help pay you, this could just help to increase those numbers again to get you closer to that $1 million or over that $1 million mark that you're wanting to shoot for there. And then we have the obvious ones, your 401k, your Roth IRA, your brokerage account. But when I'm talking through these and when you're understanding these, you also have to understand that if you have $1 million in a pre-tax IRA, you have $1 million, but you also owe taxes on those dollars. If you have $1 million in a Roth IRA, well, you're going to have a lot more than $1 million if you start to factor in the tax liability on the IRA, because you don't have to pay taxes on Roth dollars and all of the growth. The taxes have already been paid on the principal amount, and as those dollars grow, you will live on that the rest of your life tax-free. Great opportunity there. For a brokerage account, this also has a great play with it, where you're able to then put the money in and you pay the taxes on it. As long as you leave the dollars in there for over 12 months, that's going to then be considered long-term capital gains. I've done videos on this in the past, but if you're looking at long-term capital gains, your tax brackets will be 0%, 15%, or at the very highest end for those ultra high income earners, you're looking at a 20% capital gain rate. But that's something that you can look at and consider. Am I a millionaire? Or if I have a Roth IRA, maybe I only have $900,000. I'm not quite a millionaire. But if you factor in the tax effect of that, there's a good possibility you could kind of look at this a little different. And I would say, hey, you're right there at the million. Now we look at other things that we want to think through to make sure that we're getting there. And something that sometimes people discount in retirement is just part-time work making, let's say, $20,000 a year. $20,000 a year, again, going back to this 4% rule, equates to having $500,000 saved for retirement. Now, it sounds a bit crazy on how this works, but again, we're looking at just generating income during the retirement years and focusing on that with this video, and not solely focusing on, hey, I have $1 million in the bank. So if you're making $20,000 a year, that could potentially equate to roughly $500,000 saved using that 4% rule, as I had mentioned. And then you've got to look at other options within the retirement, such as strategies, because if you do Roth conversions, this may help you to maximize your dollars. Maybe you only have $700,000, but if you start to factor in the fact that you're going to get a Social Security, you're going to get a pension, maybe you're going to do some Roth conversions and those dollars are going to grow, it may break that point where you have over $1 million in just liquid net worth, and potentially all of it's tax-free. There's a lot of games to play there, as well as making sure that you're strategizing when it comes to IRMA, which is the Medicare penalties, where if you make too much money, you could have an extra tax that you're going to have to pay for IRMA. There's other strategies here when it comes to this, as well as withdrawal strategies. And that's taking from specific counts at specific times. We often talk about taking from taxable dollars first, then pre-tax dollars, and then last, after everything is compounded and grown tax-free in the Roths, those are the last accounts you're going to want to touch. So with this, it may not mean that you're truly a millionaire, but the numbers on your balance sheet are, yes, your real numbers, but they're only the surface. You want to dig a little deeper. You want to often uncover that wealth that you haven't ever realized. And that's what this video was all about. If this was helpful for you, be sure to hit the like button and let us know in the comments.